Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rice Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, good evening, good evening, everybody. Uh-oh, I almost end the stream. Man, that wouldn't have been good at all. How y'all doing this evening, man? I forgot to share the link. Let me share the link. That wouldn't have been good at all. How y'all doing today, man? Did y'all enjoy y'all day? Did price do anything that caught you off guard today? Did it do something opposite of what you expected? If so, there is a link pinned to the top of the chat on YouTube. I don't know where your chat is on YouTube, but mine is like right here. It's like right over there. Right, there's a link pinned right there. When I do like this right here on I'm looking at my computer, I'm pointing at that pinned link. That's where it is on mine. I don't know where it is on yours, but there's a link pinned to the top of the chat, right? Hanging up before we get started. If price did something that caught you off guard today, did something you didn't expect, if you was trying to pick the top, if you was trying to pick the top, and we ain't gonna call no names for people who was trying to pick the top, right? Hey, you know what? I mean, Mike Pence fly. Are you a member of Tremaine's Discord? You're not? Okay. I just wanted to ask because I went to go see if he was still on stream when I got off, and he wasn't. And I kind of like just skimmed through his stream to see what he was talking about. And he had taken a short very close to around where you said you was in, right? It was like he had got in like a little bit lower than what you said, and I was like, I wonder if he was in Tremaine's Discord and he was copy trading, because he said he was driving and he wasn't really paying attention all that much. I said, I wonder if he out here doing the copy trading. But you say you're not, so that's neither here nor there. All right. Who we got up in here? We got Jada up in here. We got Marco up in here. We got Deborah up in here. It's not light-skinned Deborah today. We ain't got light-skinned Deborah. We got Deborah. We got Mike Pence Fly, aka Empire Tradings. We got Stevie up in here. We got Here to Learn and Share up in here, holding down the top fan spot on YouTube. Got the little crown with the number 1. We got Kim up in here, hanging on to number 2. And we got Honey hanging on at number 3. We got more numbers than I see names on YouTube, but them all the names I see, so them all the names I'm gonna say. We're gonna go ahead and get into it. I'm gonna put y'all over here. I'm gonna move this over here, and then I'm gonna share my screen, and we're gonna get to it because, hey, I just ain't. I just don't feel like sticking around all that long today. Just don't. How about that? Oh, I didn't send out the bat signal in the Discord. Folk be like, I didn't get the notification. Tim, I didn't know you was live. I didn't get the notification. I sent out a notification. I said, pull up at 6. I said, pull up at 6. Everyone, we are live. Watch that space there. Live. Everyone. The bat signal is set out. Kashai was playing Sims yesterday. Avery was playing Rainbow Six Siege 2 days ago. Shout out D. D said she was hanging out at the Come Up Cousins Conference out in Seattle, Washington. I chose not to go. I had it on my calendar. I was going to go, but then my retirement reminded me that I didn't feel like going for 1, and 2, the adventures of Super Dad don't stop. So I was like, hey, maybe next year or maybe not. I'm just a non-committal retirement type guy. I don't commit to anything. I'll think about it. I'll let you know. Let me check my schedule. If I ever hit you with, let me check my schedule, 9 3/4 times out of 10, I will not be there. Quesadillas with the chicken left over? Sure. They don't have sure on the watch? Yes, right there. Sure. Quesadillas with the chicken left over. Hey, I got a new air fryer. Let me go full screen for this. I got a new air fryer. It's a beautiful air fryer. Not just saying it's beautiful because it looked good. It's the name of it is beautiful. Like Drew Barrymore is like the spokesperson for him, I think. I don't know. She was on the box. But it's a little bit smaller. Like my original air fryer was 8 quarts. Then I bought that one broke. Like we used it so much, a big chunk of the heating element just burnt out. Then I bought a new one. It was like 7.5 quarts. But this one didn't cook very well. It took a long time for stuff to cook because in the original one, the heating element was in the top and it was directly over the food. And the new one I bought, the heating element was like in the back. So it's like, you know what I'm saying? It was just like blowing the heat and it wasn't, directly above the food. So it took way before you can cook some tater tots to perfection on 370 for like 12 minutes. With the one I had bought, it used to take 25 minutes on 400 just to cook tater tots. Way too long. So my sweetie bought a new one, right? The little beautiful. Now this one is 6 quarts. They're getting smaller. They're getting smaller and smaller and smaller. but this one is 6 quarts. And my son used it earlier today for the first time because I set it up yesterday, right? Because it came Saturday. I set it up Sunday right before I was going to worship service. And then Timothy used it today for the first time, right? He cooked some salmon in it, right? And he was like, it cooked fine. I cooked it for like 12 minutes on 400. It looked like it's fine, looked like it's good. And then I got a chicken breast that was in the refrigerator, right? And I sliced it up into like some chicken tenders, made some chicken tenders. And I seasoned them, put them in there, right? And I put them in there and I cooked for like 20 minutes and they good. I probably could have cooked them for 18 minutes. They not super dry, but they, you know what I'm saying? I want a little bit more juice in them. So I probably could have cooked them for 18 minutes. So this one here cooking beautifully because the heating element is right on top of the food, like what I'm used to, right? I ain't got all day to be waiting for it to be done, man. But yeah, I like it. It's good. It's smaller, but it's good. It worked out good. Thank y'all for sticking around and listening to me talk about my air fryer. Now, if this first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not the first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty. Well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. Just be big spot if you don't hablo español. And you're tuned to another episode of the Price Action Recap, the intraday Price Action Recap. This episode is being brought to you by yours truly, the creator of the Smart Money Manuscript. The Smart Money Manuscript is your one-stop shop for all things investing, trading, whatever you want to, stock market, budgeting, planning for your retirement, day trading, ICT concepts. One-stop shop for it all. $69.99. First link in the description below. Our next Q&A session for the Smart Money Manuscript will be October the 11th. Yes, October the 11th. Every second Saturday at 11 a.m. Eastern Standard Time, we do a Q&A session inside the Smart Money Manuscript to answer your questions, because I don't believe in giving people information without guiding them, holding their hand. Do you understand it, little baby? Do you understand it? Oh, you ready to walk on your own? Go ahead. Go ahead. Oh, don't fall. You got the Frankenstein steps. Don't fall now. Hey, that's just how I am. All right. Now, let's get to it, man. If you turn your attention to the screen, what's going on, Rhonda Green? Shout out Rhonda for putting the little notey notes inside the what you call it, the YouTube chat on the videos. I can always tell when I'm cooking on a video, because the videos when I be cooking, Rhonda pull up with the hard hitting notes. If Rhonda don't pull up with no hard hitting notes, flop city. But if Rhonda pull up with the hard hitting notes, that mean I did my big one. All right. I done figured that out. Today was Monday, September the 22nd. Right. I appreciate your kind words. Right. Monday. Did anybody who in the chat? Did anybody in the chat go to the conference out in Seattle? D not in here. I know D went. Did anybody else in the chat go to the conference out in Seattle? D was all geeked up. She said she learned a whole lot of stuff about AI and different companies and all kind of stuff like that. She was geeked up. Oh, Tim, I want to hear. Oh, Tim, oh, no. What is that? Took the 850 trade. I thought the pullback would be a little stronger. That could be retracement of the CERRD, but it just kept delivering to the moon. Oh, that's something that Empire Trade said. Oh, that's from today. I saw it was like showing up in a different spot, so I didn't know what it was. All right, it was showing up somewhere else, but yeah. Empire Trades. I was just thinking about you saying you took that trade. I'm about to put you on Front Street. About to put you on blast. Ladies and gentlemen, in the chat, ladies and gentlemen, paying attention to this stream. If you are trading futures, options, stocks, no matter what you're trading, do not use a mental stop. Always, let me say it again, always, before you enter a trade, you want to know three things before you push the button, right? Before I reveal to you those three things, is there anybody who know what these three things are? Before you enter a trade, what are the three things you must know before you push the button? Very good. Here to learn and share where you're getting in and where you're getting out on a loss, where you're getting out on a win. You want to know your entry, your stop exit, and your profit target exit. Those are the three that you must know before pressing the button. You never want to enter a trade with no stop, no profit target and say, if it comes to this zone, I'm going to close the trade. If it goes to this zone, I'm going to close the trade for profit. No, 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 no. You don't do that. One reason why you don't do that, first of all, and most importantly, you want to manage your trade based off the algorithmic price structure that has been put in place. But Tim, what are you talking about? Pay attention to the charts. If, right, you are entering a long position, right? Let's go down here to a 1 minute chart so we can get some examples, right? Let's just use this right here, right? If you are entering a short position based off of this fair value gap right here, you believe that price is bearish. This is your fair value gap you want to enter in on, right? This is the swing low you're targeting, right? Now, with a fair value gap, any PD array, with any PD array, right? You have a mandatory stop, a safe stop, right? Those are the two main two. And then you can be more aggressive with your stop if you really understand price action. But the main two is your mandatory stop and your safe stop. Okay. And it's the mandatory stop, the safe stop, and the more aggressive stops are going to be all per the algorithmic price structure that has been set in place. All right. So if you are looking to take a short off of this SIBI right here, now, just like the stop loss, your entry, you have three options, at least three options to enter in off of when it comes to most PD arrays, right? You have the low, right? You have consequent encroachment. You have the high, right? The low or high if it's bullish, right? So let's just say first touch. If price is coming back up, it's the low. If price is coming down, it's the high, right? Your first touch. Okay. You got the first touch or the low when it comes to SIBIs and bearish PD arrays, and the consequent encroachment. That's the same for bearish and bullish. That's 50%. And the one that you really don't want to be trying to wait around for is the high, right? Because if it goes to the high, a lot of times you're not really right about the direction. You may get a nice little move in the direction you think, but overall, you might not be right because it's showing a lot of weakness if you make it all the way to the other end. All right. So now, when it comes to you decide based off of your research for your trading model, is your entry going to be on the first touch or the low or high, depending on if it's bullish or bearish? The consequent encroachment or mean threshold, depending on if it's an imbalance or a block, right? Or somewhere in between, like a quadrant level, right? That's why I say at least three. There's other things you can finesse, you know what I'm saying, to say, hey, this is how I enter. All right. Once you figure out your entry of how you're doing it, for in this case, we're just going with first touch because the first touch is the most kind of the most assured way to participate in the trade, right? Consequent encroachment is a little bit like better risk to reward, but it's a little bit more you're asking a little more of the trade because you want to dig deeper into the PD array. And if you're exceedingly bullish or bearish, right, you're looking for like institutional order flow entry drills where you touch and get going. Right now, when it comes to entering, and we're just using a fair value gap, right? So in this case here, right, we got a volume imbalance that's included. So here's the high of the fair value gap, right? So since we got the volume imbalance, your mandatory stop is going to be above the open of this candle right here, because this is the candle that created the imbalance. Now, if it wasn't a volume imbalance there, right, and we had a wick down here, the mandatory stop would be above this candle, right? But since we got that volume imbalance, it's above that candle there. It's above the candle or below the candle of the imbalance itself. All right, that's your mandatory stop. Your safe stop is the swing high or swing low leg of the leg that the imbalance is in. That's your safe stop, right? It behooves most traders, especially newer traders, to go with the safe stop, right? Put it 1 to 2 ticks above the safe stop or below, right? So we go, I like to go like a point, right? But 1 or 2 ticks above, below, no thing, because if it get all the way to your safe stop, 9 times out of 10, you're wrong about the direction. Okay. So, and then you want to know, when are you getting out? And you say, hey, I'm getting out here, or I'm getting out here, or what you decide where you getting out at, right? Before you even push the button. All right. And right, I just picked this just to pick it. I'm not looking at risk to reward. I had already said in the beginning, this is what we getting out, right? So, you know, when you're entering, right, the structure is telling you where to put your stop. So you're saying, if it comes here, I'm wrong, take me out, right? And this is where I want to go. If it gets there, give me my money, right? So you know 3 things before you even push the button. So when you push that button, you want to have your stop in place, because a mental stop, that don't exist, because nobody wants to be wrong, right? You're admitting that you're wrong with a mental stop, and you're going to blow every account that you get if you're relying on a mental stop, because you're going to sit there and be like, it's going to come back. 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 And on a day like today, you would have, it's going to come back yourself into the Apex reset line. Speaking of Apex, I think it's the second link in the description below. If you decide you want to try a prop firm, I think Apex is running like 80% off right now. If you use the code that's in the second link down there, I think it's the second link. I'll appreciate that. Help me, buy the Starbucks and stuff like that. Like that, I like to do. Okay, now, so now when it comes to finessing your stop, you can do other things. It's other things that you can do, right? You can look at other PD arrays. You can say, okay, I got a bullish order block, right? If we go up above mean threshold of that, I feel like I'm offside. So you can place your stop in relations to other PD arrays. Like you could put it just above mean threshold of the order block, or you could say, I want to put it, just above the high of the fair value gap, or just above consequent encroachment. All of these are very aggressive, but you're using PD arrays that you say, okay, now that the algorithm has done this, and I'm not saying that this is the case for this, but let's just say if you had like a very large imbalance you were trying to enter off of. Let me see if I can find a really large imbalance. I don't have anything right now that has a very large imbalance. Okay, this fair value gap right here, right? This fair value gap right here. We'll say it's a little bit there. Nothing there. All right, so this fair value gap right here. You say, okay, I want to get long off of this fair value gap, but I don't want to risk if I get long up here when we first touch it, or if I get long right there, right at that upper quadrant there, I don't want to risk all the way down here at this swing low right here, right? That's too much risk. Then in this case here, you could say, okay, if we've created an inversion fair value gap right here, right? Then you can say, if I get long here, right? And you can say, if we trade below consequent encroachment of that inversion fair value gap, get me out the trade. I'm wrong, right? Because you're saying, okay, price has come up, right, and given me a breaking market structure and created an inversion fair value gap here, right? And this is the first inversion fair value gap that we came down before getting this shift here, taking out the sell side. So we should use this as support. But since that one exists, I'm willing for it to wick into it. But if it goes down below consequent encroachment, just take me out the trade, right? So you can use structure to place your stop loss so that you don't have to risk all this unnecessary risk. You know what I'm saying? You can put on all this unnecessary risk and then end up finding out you're wrong. All right. So you can use, but you always want to have a stop based off of the structure, the algorithmic structure that's put there. Never use mental stops. Now, let's get to price. Any questions from anybody about that? Any questions? All right. No questions. All right. Let me put y'all over here on the side. I got the doorbell set up, so if somebody tries to come in, I can hear them. And then we're going to go ahead and get into it. Today was Monday, like we said. Last week, right, we extended the buy program, right? This was our weekly low. This was our weekly high, right? Let's just go to a daily chart real quick, right? This was our weekly low. This was our weekly high. Okay. We talked, when was that? When was that we was talking about price not caring about our man-made cutoffs, like for the end of the day, the end of the week, and all of that. It's just price is just gonna be in, it's gonna be
Saturday.
Saturday. Okay. So Saturday we was talking about price. IPTA is it has like delivery methods, right? So it's going to be doing certain things, in a certain order. So it doesn't matter if we just start in the week. IPTA don't care if we just start in the week. We may want it to start the week off with accumulation, right? But we went through and we was looking at how as price was moved, like here, this is a Friday, right? So on this Friday, right, this week, let's start this week. This Monday, we was consolidating Monday, Tuesday, Wednesday. Thursday, we started to expand up. Then Friday, we started to expand down, but we're still in the midst of this little area of consolidation, right? Then on the next Monday or Tuesday, the first day of the week, Tuesday, because it was a holiday, price continues to expand to the downside, right? So looking at this right here, true, on this Monday here, we was in the midst of a consolidation. Okay. So you can say, hey, it started out with accumulation, right? It did. But as we started this week here, this week started in the midst of what we now know to be a manipulation, right? Because it started out the first day of the week going down and taking out sell side. Once we took out that sell side, we quickly reversed, right? So this is the first day of the week, then Wednesday, Thursday, and Friday. We expanded up and took out a high. Then the next week we start out and we just continue to go up. Monday, Tuesday, Wednesday, Thursday, Friday, right? This Friday, we make all-time new highs. Okay. Then the next week we continue to go up. Monday, Tuesday. We've been expanding ever since Wednesday on the 3rd, right? We started the expansion after the manipulation on Tuesday the 2nd, right? So Tuesday the 2nd started the manipulation and started the expansion process inside this, what I'm saying, distribution leg over here, right? Remember, accumulation, manipulation, distribution, right? So if we're accumulating here, and in hindsight, we know that this drop down was manipulation. This is our distribution leg right here, right? We're going to distribute above old highs in this example. Okay. So from Wednesday the 3rd through, let's find Wednesday the 3rd, that's the 5th. From Wednesday the 3rd through Tuesday the 16th, price was just expanding upwards, right? So here, when we created this bullish order block here after trading up here, creating these relative equal highs, right? And we expanded here, we created a bullish order block right there. Once we created that bullish order block right there, leaving this area here where we offered buy side and sell side delivery, right? Once we started to leave this area here, all of this right here is now a balanced price range. So we're in a buy program overall. We're not anticipating price to, we're not trying to pick a top. So once we trade above this balanced price range, we're not looking for this to be used as support. So when we get our Fibonacci tool, right, and we run it from the bottom of our order block, right, up into the high before we started retracing back, right, we now have our price leg that we're looking for price to come back to a discount, right, because we're not anticipating price. We're not looking from down here for a discount. We're not going from this low to that high, looking for a discount, because that will require price digging down into this balanced price range. And we want to see this balanced price range act as support to price, because we're above the balanced price range in a buy program, right? So we're looking for that to act as support. Okay. So price comes back down into a discount of our dealing range that we're looking for price to participate in. And it also comes down into a daily imbalance right there. So we got a daily fair value gap there that we trade down into, right, in a discount, right? Say, Tim, it doesn't look like a discount. Go from your order block here, go from your order block up to your high, right? Why? Because this is where we're leaving the balanced price range. Okay. You can go there, but since we got an order block there, boom, want to use the order block, because the order block's job is to block price. All right. We come down into the wick of the order block, right? And what do we say whenever we have a premium or discount wick, right? If we got a premium or discount wick, what do? We cut through candles and we go find that wick and we put them in the fourth grade. Boop, right? So as price is coming back down, as price is coming back down, right? Get out of here, brush. Get out of here, brush. Get out of here, brush, right? As price is coming back down, we're looking at that premium wick right there. Why are we looking at that premium wick, right? Because the algorithm, right, recognizes this inefficiency right here, and it's going to use it as support if it wants to, right? And if you notice, when we drop down into the fair value gap, right, we overshoot it. We overshoot this fair value gap, but where do we come to? That upper quadrant right there of that wick, right, to the low end of that volume imbalance, which is a portion of this entire imbalance right here. All right, because there's a volume imbalance there, and I think there's a one tick difference there. Let's see, 95.50 opening price, 53 even, and the open 55.70. No, closes 52.75, and the open is 53 even. So it's like one tick right there. Right. So this right here is your entire imbalance for that range there, from that candle's close to that candle's open, because there's a 2-tick volume imbalance there, and you can see the volume imbalance sitting there. So that's your complete inefficiency. We trade down all the way down just above the low of it, right at that upper quadrant, right? Then price rallies up. Okay, so we come down to a discount, right? And then price rallies up. All right. Yeah, I'm trying to remember what I was talking about. We was talking about this, that. I can't remember what I was talking about. I done lost my train of thought. Right. So what was I talking about? I lost my train of thought. What's up, Felicia? Don't nobody know. Wasn't nobody listening. Okay. All right. So I know I was talking about price don't care about our man-made stops. Okay. So as we saw, right, all this time, right, we were just expanding. And then we came into a retracement, right? Then once we came into a retracement, we came to a specific point, an algorithmic point, right? And then we started to expand again, right? So all of this, right, all of this price move here is a part of our distribution leg, right? All of this is part of our distribution leg. Remember AMD, when we say AMD is everywhere, right? But in the grand scheme of things, of this buy program that we're in, and we always say we're not trying to pick the top. When we came into August, we were seeing if August was going to take out July's high and then start the bearish season. Then we said, okay, we're going into September, right? We're going to see if that high that August made is going to stay safe and start the bearish season. But the higher time frame still has not given us a bearish breaking market structure, right? We haven't invalidated the bearish dealing range on the intraday, but we haven't invalidated the bullish dealing range on the higher time frames, right? So we were just playing it by ear, and you stick with the last higher time frame bias until it's proven wrong. Okay. Now we're continuing to go up, right? We continue to go up. We run our fibs. We get projections for how far can we realistic reach. We'll get into that in a little bit, but thinking about accumulation, manipulation, and distribution, right? We want it to just happen when we want it to happen. But as we see, right, we talked about here from this week right there at the week of starting off on August 25th. This is August 25th here, right? We see how we was consolidating a little bit. We pushed up, quickly turned around, dropped down, and took out the low. So we can see that is some type of manipulation. Boop, boop, right? That's some type of manipulation. All right. And then after that, it runs up into now, right? So now we can see that this is going into some type of distribution because we had accumulation, manipulation, and now we're going into some type of distribution, right? This expansion up, right? This expansion up, we said from the time it manipulated, not counting that day, right? Until the time where it made the high, right? That was 9 trading days. 13 calendar days, 9 trading. 1, 2, 3, 4, 5, 6, 7, 8. Now, actually, 10 is 10. It's showing 9. 1, 2, 3, 4, 5, 6, 7, 8, 9. 10 days. I guess it's not counting the one. So I come here so it'll count that one. Right. So from there to there, 10 days elapsed after we made that low. Right. So 10 trading days elapsed after we made that low, before we got some type of retracement to participate in this upward move right here. Right. And we're resting. We're at all-time highs. Okay. So we're at all-time highs. Price runs straight up for 10 days, right? Before giving us a retracement into a discount, what we already pointed out, right? And after it did that, it's been going up for another 3 days, right? Another 3 days, right? Thursday, Friday, and today, right? So we're at all-time highs. And as you see, price cares nothing about our man-made, this the end of the week, this the beginning of the week. It doesn't care, right? It doesn't care because on Tuesday, right, we started the retracement on this right here, expansion, right? Remember this here, consolidation, expansion, retracement, delivery, right? We got a consolidation here. We got an expansion. We got a retracement. And now we're moving into a delivery right there. Right. So we got 10 days of expansion. 10 days of expansion, right? We'll say 9 full days, then a partial day of expansion that started the retracement because we went up, made a new high, started to pull back. Came back down to the discount, right, for the opportunity to participate. And then it went up for 3 more days, right? And this happened, this retracement started on a Tuesday, right? So when we start this week here on a Monday, we went up. Tuesday, we went up. Wednesday, we came down. Thursday, we went up. Friday, we went up. And then Monday, we went up again, right? So if you're coming in on Monday looking for price just to start back over, stop doing that. Learn where you, what do we see all the time? You want to figure out where you are in price. Where are you in price? Right? Every day, you know, On days when me and gang do tape reading, on days when I'm just sitting down to trade, first thing I do is look to see where are we in price, right? Are we in a premium? Are we in a discount? Are we on the right side of a market maker model? Are we on the left side of a market maker model? Are we in a buy program? Are we in a sell program? Are we consolidating? Are we expanding? If we're expanding, are we expanding for manipulation? If we're expanding, are we expanding for distribution? Trying to figure out where are we in the sense of if the price delivery. And once I figure that out, then I started looking for the signatures that can help me understand how I want to engage with price. Because if I just come in thinking, oh, it's a new day, so we're going to just start accumulating, because they say price will accumulate around the opening price. That is true, but it may not accumulate around the opening price on the day that you think is going to accumulate around the opening price. Got to understand where you are in the sense of if the price delivery. All right. When you understand price delivery and order flow, you right where you need to be. Okay. Now that we done said all of that, let's look at today's price action. This is today right here. Okay. We opened up the day here, right? Last night at 6 o'clock. Opened it up there last night at 6 o'clock at 24,850 even, right? We dropped down, overlapping the wick of 918, right? What do? We cut through candles and we look at premium and discount wicks, correct? Correct. So when we look at this premium wick here, right? As you see, we drop down, right? Just below consequent encroachment of that premium wick from Thursday, right? That Thursday premium wick, we dropped down just below consequent encroachment of that Thursday wick. Then we rallied all the way back up, made a high, and then closed off of the high right there. All right. Now, not only do we have this premium wick here that we can watch, right? We got another little premium wick right there. All right. We're looking at that premium wick right there too. Right now, with this wick here, price open above it in a buy program. So you're looking at this wick to act as what? Somebody tell me, what are we looking at this wick to act as? We opened above it and we're in a buy program. So we're looking at this wick here, we're grading it, and we're looking for these quadrants to offer what? Support. Very good, right? We're looking for it to offer support. Now, we opened up below this wick right here, right? So we're looking at that wick. We're in a buy program, so we're looking at it for two reasons. What's the first thing we're looking at it for? We're looking to see if it wants to offer what? We want to see
resistance.
If it offers resistance, correct? But we want it to offer what? Hello?
Support. Buy side.
Yeah, we wanted to offer support, right? We open, since we open below it, we want to see if it wants to act as resistance, but because we're in a buy program, we want it to offer support. So we want to push through it and then use it as support. Okay. All right. Everybody tracking? Everybody tracking. Okay. Now, these are daily wicks that we're looking at, but we're using these wicks as support or resistance on intraday time frames, right? And the reason why we're using these wicks as support or resistance on intraday time frames is because, right, well, you can do it at any time, but especially at all-time highs, because we don't have any structure to look for as support and resistance over here at these all-time highs. There's nothing up here. right? So we're using the current structure to offer support and resistance. That's what the algorithm is going to refer to. Okay. Okay. Tracking. All right. Now let's just hop down to a 15-minute time frame and let's go through price. Right. So we opened up. This is where we opened up right here. All right. Right. We open up right here. Note these up here. Matter of fact, let me change the colors of these. This is our premium wick. Let's we're going to make all of these lines blue on the premium wick. All right. So we're making all the lines blue on the premium wick. And then on the discount wick, we're going to make all the lines what color is not on there? All right, let's go orange. That's kind of hard to see. I guess we can go with the red. It's kind of hard to see. Let me darken them up. Maybe that'll help. Yeah. That helps. If I darken them up, that helps because there's a lot going on. All right. So we're looking at, right, how we offer support. Okay, I want to change the middle one so we can know what the middle one is. I'm going to make the middle one blue on the red. I'm going to make the middle one red on the blue. All right. Okay, so we open up here, right? When we said we open up there at 24,850 even, right? We drop down, then we trade back up, right? We go up to consequent encroachment of that daily premium wick, right? Don't take out the buy side, set relative equal highs. Don't take out that high from 430. Don't take out that high from 345. Relative equal highs. Stop at consequent encroachment of that premium wick, right? We drop down, right? Create an inversion fair value gap right here, right? Notice when we trade up here, right? And trade up to this anticipatory reactionary point and then break down, right? Uh-oh. I went back too far. Right. When we traded up, when we displaced up above this high, ran into this anticipatory reactionary point, came down. That's our first BISI that we created going up, taking out that high, right? What's that? That's inversion fair value gap. What inversion fair value gap is that? That's the first BISI that was created when we took out liquidity, traded into an anticipatory reactionary point, then dropped down, right? High probability inversion fair value gap there. Trade back up into it at the low end of the premium wick right there, inside of that inversion fair value gap, inside of that SIBI right there, right? Then price eventually gives up the ghost and drop it like it's hot. Now, as it was coming down, we did retrace back up into that SIBI right there that was created at 2 a.m. Right, that 2 a.m. SIBI. Why do I have that right there? Did I mark that? Did I mark that recently? Why did I put that there? What was I showing there? Daily. I don't remember putting that there. Y'all remember why I put that there? 60 minutes. That's a fair value gap. That's highlighted. That's a fair value gap that's highlighted. Anybody know why I put that there? Was I talking about something? I don't know. Get out of here. I don't know why that's there. All right. So we dropped down, right? We displaced down. We did retrace back up into this 2 a.m. SIBI right there. Retrace back up into the 2 a.m. SIBI after dropping off of the new week opening gap, after dropping off of the inversion fair value gap, high probability inversion fair value gap, right? Drop down, trade back up into the SIBI after leaving this balanced price range, right? Does that sound familiar? We just talked about that. Yes, we did. It's time and prices fractal, buy side and sell side delivery. Leave that area right there, right? So when we're leaving that area here to here, right, we came back up to a premium of this area into that fair value gap there. If you're looking at the breaker into the breaker, that's fine, right? Whatever you're choosing to trade off of there, then we drop down, right? And what do we come to? Somewhere ambiguous. No, not really, right? We trade down and we reprice the lowest imbalance inside this range here. We spoke about this on this morning's tape reading stream, right? We come in, this is the lowest imbalance right there on this 15-minute time frame here. See what's that? Closed at 747.25, open at set. So there's no volume imbalance there. No volume imbalance here. 71.25, 71 even, right? No volume imbalance there. So there's your 15-minute imbalance there, the lowest one in this range. Now, this right here is our bullish dealing range right there. That's the latest expansion leg of our bullish dealing range, right? Right now, what's our short-term bullish dealing range going into today, right? What is the short-term bullish dealing range going into today's trading? Somebody tell me. The algorithm gave it to us wrapped up in a little bow, handed to us on a silver platter. What is it? Somebody tell me. Hello.
Wait, what was the question again?
Oh my goodness. Oh my god. Ain't nobody listening to me. Why do I even waste my time?
I'm listening. I'm trying to figure it out.
All right. Somebody said prior day's low and prior day high. I'll take that. Yesterday, the day before's range, right? From the lowest low to the highest high of the day prior, that's your algorithmic dealing range that the algorithm gave you on a platter. In this case right here, it is a bullish dealing range, right? So coming into today, we're inside of a bullish dealing range, right? Any dealing range that you have, it can be bullish or bearish, right? You always want to focus on the latest expansion of that dealing range, especially, right? Especially if the first portion of it is efficiently delivered, right? So this is the low of our dealing range. This is the high of our dealing range, right? And if we get a Fibonacci tool, which is already there, I think. No, it wasn't, right? But this is equilibrium, right? So price went up, came back down here, and then it expanded away again. So now this is your latest expansion leg of your bullish dealing range. So this is the area that you're looking to participate in the move. Okay. At this point when price opens up here, at this point when price opens up, right, from this 11:30 a.m. low on Friday to this 3:45 p.m. high on Friday, this is the range you're looking to participate in. Okay. When we look at the range, right, we have a BISI that we've already traded down into, right? And then we got a breakaway gap that we never traded into, right? As price was going up here. Open up a new day. We did what we said we did. And once we dropped down, we came all the way down into a deep discount and traded into the lowest imbalance of this range here. At this point here, after offering sell side delivery to that buy side imbalance, sell side inefficiency, right? We have completed the obligation of offering buy side and sell side in this range right here. Now, there's nothing left here but liquidity. Okay. Nothing left there but liquidity. For this piece of price section here, this dealing range, you don't want to see that low taken out, right? Because all of this down here has been efficiently delivered, right? And now when we coming up here, this is the price leg we're looking to participate in. This is the price leg we're looking for to come back to a discount to offer us an opportunity to participate in longs. Okay. Now we come down to the imbalance, and what is this imbalance lined up with? It's lined up with consequent encroachment of that simple to follow 20-day moving average. Hey, Calvin, there's something over there called the door. All right, back to what I'm saying. Right, price. Hey, Calvin, it's simple to follow a blind man into the ditch. Hey, Calvin, it's simple to get on 185 and do 100 miles an hour with your eyes closed. It's a lot of simple things in the world. It don't mean you should do it. Hey, Calvin, it's real simple to walk in a bank with a shiesty on and a pistol in your hand and say, give me all your money. Oh my goodness. Hey, so what do we say about those quadrant levels? From 500 to 250K in 6 months. Hey, Calvin. We don't care. Calvin, if you hold on. Calvin, pull up in the Zoom so we can talk. Calvin, click on the link in the Zoom so we can talk. Hey, Calvin. Calvin, if you had $500 and made $250,000, you wouldn't be on my live stream, Calvin. I don't know nobody with $250,000 that's scrolling through Al Gore's internet looking for trading channels to follow. Hold on, Calvin. Calvin, hold on, Calvin, hold on. Oh my goodness. Calvin.
Uh-oh.
Calvin, I call Jesus cap, Florida cap, Miami cap, Atlanta cap, white cap, red cap. Hold on, Calvin. We got pink cap, pink cap, blue cap, tan cap,
Oh goodness.
black cap. Calvin, you capping. Calvin got 250,000.
Hey Tim.
Yeah.
He say he been here since check the check the chat in YouTube.
I see it say cuz been here from Come Up series. Just was on cuz haven't spoke to you in 3 years. He still capping. I don't kill. 250,000 $6. Hey, congratulations, Cal. I gotta put my hats back. Y'all know I don't care. All right. Okay. Congrats, Calvin, for going from 500 to 250,000 in 6 months.
Hey, Empire Trade say we should have signed up for his course.
Yeah, sign me up. Sign me up. All right. Congratulations. I'm gonna tell you right now. Anybody who come to me and say, I took this and took it to this in X amount of time. Hey, I'm not saying it's impossible, right? I'm not saying it's impossible, but I know how these numbers work, right? Let me go full screen. I'd have had my fun. I'd have had my fun with Cap, right? I know how these numbers work. All right. So for an individual to take $500, right? Take $500 and turn it into 250,000, right? You would have to be severely over leveraged on every position that you take. On every position that you take. If you have realistic risk management, right? If you got realistic risk management, it will be almost impossible to see X factors at that magnitude, right? At that magnitude. Nothing's impossible, but I know how these numbers work. I've been doing it for a long time, and it take money to make money, right? It take money to make money. So whenever I see YouTubers and different people saying, hey, I got this simple strategy that I use and I turned $500 into 250K. I turned $100 into 300K in X amount of months. right? You would have to be severely over leveraged on every position that you put on in order to do it, right? Severely over leveraged in order to do it. And this is why I say that, right? Me personally, I took $250, right? I took $250 in June of 2021, right? Went balls to the wall with the SPY. This is when I was trading SPY options, right? Balls to the wall with SPY options, doing 0 days, doing weeklies, going balls to, I'm talking about risking the entire portfolio, like on every trade. I didn't let it like take the whole portfolio, but I'm talking about I was putting all the money that I had to buy positions, right? And over the course of like, I think it was maybe like a month and a half, right? I grew that to like a little over $10,000. And that I'm talking about, that was going balls to the wall, over leveraged mammoth, getting 500% returns, getting 1,000% returns on positions using the SPY. So I know how the numbers work, right? That's why I say you would have to be severely over leveraged with every position that you put on in order to perform a feat like that. And that's not trading, that's gambling, right? That's not trading, that's gambling. So when I see people who you say that, oh, I turned this into this in this many days, and it's a very small amount of time, and it's a very large X factor, first of all, I call cap. But if it happens to be true, you're not trading, you're just gambling, right? Not trading, you're just gambling. That's just the hard, honest truth, right? But congratulations, because it's good to have money. It's good to have money, but we not into gambling around here, right? We ain't into gambling. We push the button for specific reasons. If price does this, then it should do that, right? If it comes back to here, I'm wrong, take me out, right? We're not over leveraging. If we take a loss, right, what we gonna do? We're gonna cut our risk in half, right? We're gonna cut our risk in half if we take a loss until we bounce back. We take 2 losses in a row, we're gonna cut that amount of risk in half again. Why is that? Capital preservation, right? We ain't trying to burn through our capital. We ain't going balls to the wall. You hear me? Now, back to what I was saying. Congratulations, Calvin. We came down here. What do we say about these quadrant levels? That was my question. What do we say about them quadrant levels? Those quadrant levels do what? Algorithm is going to do what at them quadrant levels? What is it going to leave at them quadrant levels? What is it going to leave at the quadrant levels?
Balanced price range?
No. What is it going to leave at the quadrant? Remember, this is the quadrant of our wick that we watch to use as support.
Oh, balance. Oh, okay. Never mind.
What is it going to leave at those quadrant levels? Yes, breadcrumbs. PD arrays, exactly. It's going to come back and scoop up those breadcrumbs. When we came back down into the discount of our dealing range, what did it go to? It went to a imbalance, right? Right there at consequent encroachment, right? When we're watching any PD array, when we say we come down into it, right? We want to see it. We prefer it to react off of that upper quadrant, but we give it down to consequent encroachment or the 50% to look for that bounce, right? That's why most of the time when you see us marking it out, we only have it marked out with that 50% line in there because that's where we're looking for it. That's the respect line, right? On that time frame, which is a daily time frame, right? The 50%, that's that respect line, right? So we come down there to that consequent encroachment right there at that discount PD array. Okay. Once we hit that discount PD array at that consequent encroachment, what do? We rally back up to the high of the wick, right? We go back up to the high of the wick, and then we come back down where? To that same fair value gap at that same 50%. At this point right here, once we're doing this, what is the algorithm showing us right here? It's unwilling to continue lower. It's using this fair value gap and, more importantly, the consequent encroachment of that wick that we was watching to act as support, right? It let us know it's unwilling to go lower right now. And once it did that, right, when we come over here at a very specific time, right, this right here starts. We come right there. Right there. Uh-oh, why didn't it? Oh, it did. Okay. That right there starts the pre-market for the New York session, right? So when we come into a specific time, coming to the New York pre-market, starting off of a new New York session, right? Price rallies away from this discount PD array, from the support of the discount or the premium wick that was in the discount, right? Rallies away from it. And where does it go? It rallies all the way up and touches the upper quadrant of that premium wick that's above price. This is the premium wick that was below price. This is the premium wick that was above price. We're looking to see if that acts as resistance, right? So we go up here. Shout out Jada, I think it was, that was like, hey Tim, what about that wick? We didn't mark it out, but it's coming to. Yep, you're right. That wick right there, we're looking at it, went up to the upper quadrant and closed just below consequent encroachment, right? The next candle here, looking at this time frame, can't tell if it went up or down first, right? But we kissed the high, made an equal high, and then we came back down into this 930 candle, trading back down into that 930 candle, trading back down below midnight, trading back down to consequent encroachment of the new week opening gap, right? When we traded down into the wick of that 930 candle, now you're watching to see if this trade down is going to act as what? You're looking to see if that's going to act as what?
Immediate rebalance.
Immediate rebalance, right? Because we've expanded up with a great amount of displacement, right? Great amount of displacement. We created 1, 2, and the possibility to create 3 BISIs, right? And then once we came into this candle here at 10 o'clock time, right? Starting a new hour, okay? Time, we're inside of the macro window. right? Macro window starting a new hour, right? We create relative equal highs. We come down, create a possible immediate rebalance. We trade below the midnight open, right? We are leaving an area where we offered sell side delivery and buy side delivery. And then we are leaving that area, right? So now this area right here is a balanced price range. If we are exceedingly bullish, right, we don't want to see price digging back down into these bissies down here. Why? Because they are contained inside of the balanced price range. So price trades down and creates a possible immediate rebalance. If you get an immediate rebalance, right, you want to see severe discount or premium sensitivity. In this case, we get severe discount sensitivity. We trade down into that wick right there. As we trade down into that wick, we don't make it to the upper quadrant. We stop at consequent encroachment of the higher time frame PD array, and then we reject off of it. This is what they call discount sensitivity. You're coming into the discount of this little retracement here, and it's bouncing off, showing sensitivity. Then the next candle opens up, drops down to this same PD array, discount sensitivity, pow, take off, right? It's trading down inside that wick, touching the higher time frame PD array, and then it take off, right? Proving your immediate rebalance, right? Come down, consequent encroachment, take off, right? That right there, after you trade down into that wick on that 930 candle, right? The next candle gets out of there, gone, right? Giving you your immediate rebalance right there. Okay. Get it? Got it? Good. Okay. Now we come up, we take out the daily high, we take out the weekly high, and then that gives us what? A brand new all-time high, right? Give us a brand new all-time high. So as we know, you can do it anytime. All right. So we've seen how price used that premium wick that was below us, right? We see how price ate through the premium wick. So now it did not offer resistance at all. So now we want to see if it be used as support. Guess what? Price just totally ignored it, traded up, closed above it, never traded back to it again, and started creating new structure here. So it used it as support, right? Because inside this candle right here, when we blast up there, this is where it was being used as support there as we was cutting through it. Why? Because the algorithm is getting out of there. It's done with all of this. We offered buy side delivery. We offered sell side delivery. And when we leave this area right here, right now, all of this is a balanced price range. So guess what? The algorithm never came back to it, right? Because it's exceedingly bullish. It pulled back to a discount of the move. Go from your order block, right? Go from your order block, go up there to your high. It came just down right there to just above equilibrium right there, right? Didn't even try to come down, including the order block, right? If we go to just the candle, it takes it, but it when you include the order block, didn't even come. Because y'all heard me say you can look at the candle, but I like to include the order block too. When you're looking at it there, that one there didn't even come near, right? It's using that 2 standard deviation as support right there. Oh, let's talk about that, right? So come in here. Let's get rid of all this other stuff. We done looked at all that, yada, yada, yuda, yuda, right? Tim, what is that 2 standard deviation line? Well, I'm glad you asked that question, little Timmy Rogers. Right? Whenever, yeah, you can do it at any time, but especially when you're trading at all-time highs, right? You want to use, right, institutional market structure to give you your targets. I chose to use my 60-minute time frame, right? I chose to use my 60-minute time frame here. Okay. Why did I choose to use my 60-minute time frame? Just because I wanted to, right? Because this right here, this daily low right there, this daily low here was the lowest low of my current dealing range that I'm in, right? And this right here is the current price leg of that dealing range that we're trading in. So based off the daily time frame, right? 2 time frames down from the daily is the 60-minute. So I'm looking at a daily dealing range. So I go to my intraday time frame, which is 2 time frames down, which is the 60-minute, and I found me an intermediate term low. That low is important. That's why he's smiling right there, right? So I anchor my fib there on the low, and then I take it back to that high right there. You say, Tim, why didn't you use that high right there? Because from this high to that high, that's the move right there. Nothing wrong if you want to use that, but I want to use that high right there, because from that high to that high is the move. All right. Anchor my fib there, anchor my fib there, right? And then when you project it up, right, it's giving you reasonable targets that you can target as exit points above the high when you get into all-time highs. All right. So, and then a good way to validate if you got it anchored in a algorithmic place, right? You already did it based off of algorithmic structure, right? But then when you can look from like your entry leg, right? This is your entry leg here, right? You can find another intermediate term low inside your entry leg, right? If it's not offering one on the same time frame, like here, it's not offering one here on the same time frame, right? Because these are all short-term lows right here, right? Right? This is a short-term low. This is a short-term low, right? I don't have any intermediate term lows in here, but you can look on maybe a 15-minute time frame, and you may be able to find an intermediate term low over here on your entry leg somewhere, right? So if I come here, I can see there's an intermediate term low over here on the 15-minute. So I can use this right here to project, right? I can use this here to project up there, right? And when I see areas where I have nice confluence of ranges, right? This right here, this 1.5 and this 3 deviate, those are lined up beautifully, right? When you see that confluence like that, that's letting you know, right? These are high probability targets that the algorithm can reach into when you anchor it in these different algorithmic places, and then they give you nice confluences as far as, okay, yeah, we can reach into this, right? And it can be done throughout all of the different areas. You find an intermediate term low, right, where you go back to here, get there, right? Then you have, right, from your low back to your high there. You can use that high there, but I want to use that one there because that's what started it. Got an order block right there, right? Swing high there, but this is where it started at and dropped right there. Then we got nice confluence, right? Coming there, right? These right here, kind of far away, but up here at this 2 standard deviation and this 3.5, really nice confluence right there, right? For realistic targets that you can shoot for as for your extensions, right? Then looking at Did I just put this here? Yeah. I must have. Yeah, I must have just put that there. All right. So this morning we just kind of went up, right? Starting here at 9:30, right? We just went up, right? Hung out here for a minute, right there at that 2 standard deviation from that projection area that we looked at right there, hung out there at the 2 standard deviation. And then we moved up to 3 standard deviations there around 12:30, right? So around 12, like 12:45 or so, right? And then we hung out there at that 3 standard deviation for a while there. And then we moved up to 3.5 standard deviations there. And then we started to make our way back down. As you see here, I was in here this afternoon looking at the price in the afternoon here. If you're wondering what this stuff is, I can go and show you. If I come to my hourly time frame, right? If I come to my hourly time frame, this 2 p.m. candle right here, right? Looking at that premium wick right there on this 2 p.m. candle right there. It's 2 p.m. candle. Then at 3 o'clock. So that's why I got that premium candle there, because and then if I go back down to 15-minute, you see here, this is my buy side opening range in the PM, right? So that's my highest high between 1:30 and 2. This here is my lowest low between 1:30 and 2, right? That's my opening range for the PM there. This right here, this is the first BISI that was created, right? When we traded up into my anticipatory reactionary point there, as we come above this, come above my highest high for the afternoon session, right? As we come above my highest high for the afternoon session, that's the first BISI as we trade into that anticipatory reactionary point, that 3.5 standard deviations, right? We say at those 0.5s, right? Possible area that can retrace or consolidate, all right? So we got a premium wick on the hourly there. It's actually on the 15-minute too, as I look here, right? So now we're looking at this right here to see if price wants to use it as support to continue up, or will we hit this anticipatory reactionary point and use it as resistance to go down. All right. Why is that? Because we're trading but we let the algorithm set a range in the afternoon, right? Coming in the afternoon, we set a high, we set a low, we set a high, right? We set a low and a high, boom, 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 right? Got a short-term bullish dealing range right there. We immediately engage the buy side. All right. Once we engage the buy side, we create a BISI there. We trade back down into the BISI, then we trade up into our standard deviation, aka our anticipatory reactionary point. After we hit that, right, we drop down, trade all the way to the low of the wick, right, come back up and close above consequent encroachment. The next candle, we open up, trade above the closing price, but we trade up to just above the high of that wick that we're looking to see. Now that we've started trading back down, are we going to start using it for resistance? All right, trade up to the high above the closing price of that prior candle, right? And then we immediately drop all the way down, right? Creating an inversion of that first BISI that was created as we traded above our buy side and into our anticipatory reactionary point. Then we trade all the way back down here, and we get us a closure just above mean threshold of the entire bullish order block, right? So at this point here, we're still showing respect for that bullish order block, right? Algorithm's not dumb. It understands that we're showing respect for this bullish order block. So guess what it does, right? It opens up here, trades back up, creating an immediate rebalance by trading back into this 315 candle, right? And then it goes all the way up to consequent encroachment of that premium wick that we're now looking to act as resistance. And when we hit it, right, it drops back down, right, and closes back below that inversion fair value gap, that high probability inversion fair value gap. Then we open up, we come down, close below mean threshold of that order block, create relative equal lows there. Then we trade back up, right? Kiss the high one more time, trading into the premium wick, right? And then we finally give up the ghost and drop down and trade into the sell side. And that's after 6 o'clock, because we opened up here at 6 o'clock, right? So we open up here at 6 after we traded back up, right? We ended the day here, right? That's how we ended the day there after trading back up, right? Ended the day here. And then at 6 o'clock, we opened up, traded above that high, then came down and traded back into that low right there. So again, the algorithm don't care nothing about our man-made stops. It don't care that, oh, we stop price right here. Guess what it did? It created a range, right? It engaged the buy side, right? Gave a signature that it wants to come to the sell side, set relative equal lows, traded back up, right? Traded back up into the premium wick, right? Came back up to that touch that buy side one more time, right? And then it continued down to the what's the name? And it respected the lower quadrant too. I was just moving it over here to see how far up into that wick it dug. It respected the lower quadrant of the premium wick. And then completed that little dealing range there after setting the range right there. So that lets you know the algorithm don't care about our man-made stops. It's all about where are we in the sense of price delivery, and it's gonna go ahead and complete its mission. It's all about you getting in tune with it and understanding where are we in the sense of price delivery, what is the order flow, and is it feasible for me to interact at this time? Okay, that's all I got. Anybody got anything for me? Question: can you just put 20-day moving? No, I don't. I don't even know how to get to the 20-day moving average. No cap. That's I don't even know how to put a 20-day moving average on my chart using TradingView. Do anybody? If you know how to, if you know how to do it, tell me how to do it. I'll do it. Indicators at the top. Is Calvin still in here or Calvin gone? If Calvin ain't in here no more, I ain't even gonna worry about it. Yeah, Calvin ain't here no more, so I ain't gonna worry about it. Okay, what's the how you do it? What's the how you put the move average up there? Y'all say hit it. Calvin still in here. Y'all say hit indicators. And then we say type what? 20-day SMA. That's it right there. 20-day SMA. 200. Oh, that's a 200. That's a 200. Moving average simple. Which one? 20-day moving average. Now I do remember they got simple moving averages and exponential moving averages. Lost for 4 years, figured it out. 20 EMA. I mean, every strategy works. My financial advisor used moving averages on his charts. You said EMA, moving average, exponential. All right. What time frame? Because all the EMAs they work on, they based on the time frames. Right. So on the daily time frame, we well above the 20 EMA. Right. So right here on the retracement back in right there. Right. Retracement back in to the 20 EMA. Where's it coming? What we said right there to our fair value gap. Right there. Right. Right there to our fair value gap. Retrace back into it. Right there. Right. And then after that, right, there's right, no other indication on the daily time frame as far as um an opportunity, right? So is you got different strategies that people use for EMA. Some people use it right like a EMA cross. If you cross it, we're doing this. If you know what I'm saying, EMA bounce, EMA, you know what I'm saying, cross and retest. It like people got all different ways they trade them. Then we look inside, like on the 60-minute chart here, right? Because what EMAs do, what moving averages do, right? Right. It gives you the average of whatever the number is, right? So if you got like the 20 EMA, right, it gives you the average of the last 20 candles, whatever time frame you on. If you got a 50 EMA, it give you the average of the last 50 candles, you know what I'm saying, whatever time frame you on. And the simple EMA, it's like an equally weighted thing across those 50 candles. And the exponential EMA, it's it puts more emphasis on the current price action. It puts more emphasis on the current price action. It's giving you the average of the last 20 candles. But if the last 5 of the 20 are like staggeringly different, it's going to put more weight on those last 5, and it's going to exaggerate the move of the curve more because those last 5 are like got so much volatility of like have a big range, right? And with the simple, it's just going to be more equally balanced across, you know what I'm saying, the range of all those candles. And then it's just plotted out over time and you connect the dots. You know what I'm saying? They're plotting out the average over time and then you just connect the dots and that what gives you the line, right? So the EMAs are a hindsight thing, right? So the candles have to happen before the EMA can print the data, right? Now the downside of that for a person like me, a trader like me, right? That that doesn't help me because I feel like I'm gambling because I'm just relying on, okay, I think this is going to happen because it's touching this EMA, right? I have to know the why behind what's going on, right? I need to know the why behind why I'm pushing the button. That's why the ICT concepts work for me because I know that because if the did this because it created this high, because it created this low, because it created this fair value gap at this very specific time and price, there's a high probability that it's going to come back to that fair value gap and then continue. So I understand. And then I understand because it's coming back to this fair value gap, it shouldn't go here. So I know I can put my stop there and it be safe, right? But with using stuff like moving averages and MACDs and Bollinger Bands, right? I'm not getting that same level of assurity, right? That's for me. Now I used to trade Bollinger Bands. I used to trade moving averages. I used to trade MACD. I used to trade RSI. I used to trade all of this stuff, right? But none of it fit me and fit my trader identity because it all left me wondering, why is this working? Why can I buy it if it goes below this EMA? And I need to know why. And then the times when I did it and I got wrecked, like here, just say here, when it came below this EMA right here, and I tried to buy that and it came all the way down here and wrecked me because I didn't have enough. You know what I'm saying? I couldn't afford to like put my stop all the way down here, right? When I came down, why did it go so far? Why did it go so far right there? And the only thing I used to get in the past and groups, you know what I'm saying? No shade to any of the groups that I was in the past. I learned stuff from them groups. You know what I'm saying? Only thing I got told, oh, that's just stop loss hunter. That's a stop loss hunter. Don't worry about that. That happened. Well, no, hold on, man. You ain't gonna just tell me just don't. I just lost some money. Don't tell me don't worry about that. That's just a stop loss hunter. I need to know. I need to know why. Why, you know what I'm saying? So, you know, that's a 20 EMA. What you want me to, you asked me to put it up there. It's up there. What now? What you want me to talk about, Calvin? Got the 20 EMA on there. What you want to talk about? Hey, do anybody got anything? I'm hungry. It's 7:50. I've been on here for a long time, and Calvin typing too slow. Ain't nobody got nothing. All right, tomorrow Tuesday. Let me take this EMA off my chart before some hater come on my channel be like, see, I told y'all he be using EMAs. Y'all know what I just looked at? When I put that EMA on there, it was set to 9. It was set to 9 when I just went in and changed it to 20. Right. I just went in and changed it to 20. When I just went to the EMA, I saw it said 9 right there. When I went to delete it, I said, oh, that's set on 9. So I went in there because it was like this. When I can't remember on the daily chart, it had dropped down below the line, right? But when I looked at it, it said 9. So right now it's set to a 9 EMA. So when I go in and set it to 20, boom, right? That's the 20 EMA right there. So we touched the 20 EMA back on the 5th, right? So we traded below it. See, some people, they look at this right here like an EMA cross. See how we went below it and then we crossed back above. When we come back and test it, they gonna buy it right there, right? Because we got an EMA cross, then it came back and tested and it go and they buying when it come touch right there, right? Because we crossed back above the 20, we trade back into it to test it and they gonna buy right there just based off the moving average. You know what I'm saying? It's a very non like complicated way to trade. You know what I'm saying? Very non-complicated way to trade trends, right? Because it's showing you the trend based off of however many days you put in there, right? Because we put in, and when it most time when people use like the 200, they be using like a simple moving average, right? We're well above the 200 day. Like people use the 200 day like when they're trying to buy like leaps or like buy more of like a long term buying the whole thing on a stock, right? If they look for a buy and whole thing on a stock, a lot of them look to load the boat, as they used to say, at the 200-day moving average. If Microsoft come down to the 200-day moving average, they're gonna load the boat, right? They're gonna load the boat. Let's see. All right. So if I go to Microsoft, so like back here, when Microsoft came below the 200-day right here, right? This right here was a great place to be buying Microsoft for like a long term because it's below the 200-day moving average, right? But they used to use like the simple moving average when it's like 200-day to get like a more smoothed out type move. Right. See how like the simple got a more smoothed out type move. It ain't as, you know what I'm saying? It ain't as volatile, I guess. Right. It's a little more smooth. Like this is 200 simple. Right. That one there. Right. See how it don't dip as low as this one here, because the exponential, it puts more weight on these candles right here. You see how these count, like up here, these candles are kind of like a tight little range, and then as we come here, it drops off like exponentially right there. So the exponential moving average dips a little bit harder right here in this area, right? And then you see how it rallies back up sharper. The exponential rises up a little bit more because it's rallying sharper. It's putting more weight on the more current price action over those 200 candles. Right. Now you see how you did what? I'm not gonna try for 30 days. I'm sorry. But I don't see how you did what? I don't trade. I did this before. It ain't like I never did this. I did this before. I literally just said that. I used to trade SMAs, EMAs, MACD, RSI. I used to trade all of this. It just didn't fit for me as a trader. So I ain't gonna try for 30 days, but I don't see how you did it. You didn't tell me how you did it. Take 500, try that 6 months, see what. Hold on, man. Hold on, man. Wait a minute. Oh man. Here we go. We gonna cover it. Then we gonna cover it. We gonna cover it with the we gonna cover it with the Jesus hat. We gonna cover it with the Jesus cow. Hey man. Hey, 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 look here. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. Hold on, where y'all at? Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers. AKA seems funny, just try it. I done said how many times I got to say I traded moving averages. How many times do I have to say that? Am I? Can y'all? Hey, can somebody? Can y'all hear me? Hello, hello, hello. Can y'all hear me? Who who in the Zoom call? Who in the Zoom? Can
Yeah, I can hear you.
you hear me? Right?
Yes.
Did you hear me when I said I traded and moving
Yeah, you
averages?
did.
Yeah. So. Hey man. Hey, tomorrow is Tuesday. There's no tape reading session tomorrow. We we got we gonna have the price action recap tomorrow. Hey, yeah, hey y'all, should I wear my caps tomorrow? Should I wear should I should I wear my caps tomorrow?
Tim, you make me laugh. Are you saying you worn all those caps before? You worn all those caps before?
Yeah, this ain't even all the ones I got. These just all the ones I could grab at that time. Oh, all right. So, all right, man. No tape reading tomorrow. We got price session recap tomorrow. If y'all got something out of this one, I done did my job. If y'all didn't get anything out of this one, I promise I'll try my best the next time to hopefully share something that you can find some value with. It's all fun and games for me. Don't take nothing personal that I say on Al Gore's internet, right? It's all fun and games. There's more than one way to skin a cat. There's no such thing as one way to engage with the stock market, right? I have no problem with the way anybody chooses to trade, right? Shout out to everybody who go in and get their pound of flesh, whether you do it by day trade and swing trade and invest, however you make your money in the stock market. I salute you with both hands, right? I'm steadfast in what I trade with. I'm unmovable. It's just like my faith in Jesus. I'm unmovable. You cannot convince me that I can be saved by any other name. You cannot convince me that there's anything that I can use that's better than these ICT concepts, right? I can't be convinced otherwise. You know, no ill will toward anybody who don't believe in it. No ill will toward anybody who think it's too complicated. All right. It fits me. With that being said, I appreciate y'all for tapping in. Till the next time I decide to share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. That's just Big Spot if you know hablo español. Y'all be safe out here in these trading streets, man. Gone. Yeah.